Oh, there we go.
There we are. There we go.
Hi, everyone. This is Bobby.
Hey, this is Brian.
I'm Paul.
And we are Support and Resistance. This is episode 8 for us. So we're 2 months in now into this channel. And we believe information should be free. And therefore, we've come together with over 5 decades of industry experience to form this channel. And we have a really exciting episode for you guys today. So without further ado, I'm going to pass it over to Paul and to talk over predictions from last week.
Awesome. All right, let me put my screen up here. Give me a couple seconds. I want to make sure I get the next couple articles up here. But we've had some very interesting news, and actually we can start off.
Wait. Back up.
Yeah.
Projection.
Oh, come on now. We ain't got to talk about those predictions, do we?
No. Back up. Let's do the projections. and then after the predictions, I'll introduce our guest.
Okay. Come on. All right. See, Brian happens to like to do these predictions, guys. He really likes it because when Brian gets it right, Brian wants credit. So.
Hey, I mean, you got to take credit when you get it. You're not going to be right all the time, so you got to get it.
Okay. So that's how
we had multiple winners on this one.
We did have multiple winners. To be honest, we had multiple winners. I mean, I was a little bit timid with my call. I think Bobby was a little bit in agreement, but it was really Brian who came out of the blocks with like the best of all best predictions. And actually, he nailed it once again. So, Brian, if you want to talk us through why you made that prediction and what it was all about, we appreciate it.
Really, it was just the internal indicators that I was watching that was still showing a little bit of bullishness to the upside. So I thought that 5,200 level was going to break to the upside before. Actually, it was the 377 exponential moving average, and then the 233 exponential moving average was underneath it. I still thought there was enough momentum to push through that 377 and get us to 5,700. We only got to 5,650, but $50 among friends, I'm going to say I'll take that win. I thought it would get there, and then we would sell off a little bit and hopefully gather up some more buyers and then break to a new high later on. Maybe this week, maybe next week, I don't know. But we got the call right, made a good $500 move in a week, so I like it, and I'm going to take the win. I'm taking the win.
Good job, Brian.
Well done, my friend.
All right. Well, before we get to the news, let me introduce our guest.
Okay.
Tonight we're extremely pleased to have Murad Mahmudov. I hope I'm not messing your name up, but to join us tonight, a very special guest from the cryptosphere. First, Murad he's had an incredible interview with Anthony Pompliano that covered a ton of information about Bitcoin. And it was called, I believe it was called The Ultimate Bitcoin Argument. So if you haven't watched it yet, I highly encourage you to go out there and watch it. I've watched it at least 3 times. It's got a lot of really good information in it. So I highly encourage you to go out and see that. Murad's a graduate from Princeton University in East Asian Studies and Finance, and is currently running a cryptocurrency hedge fund called Adaptive Capital, and has great insight regarding the Bitcoin as possible new world currency. And today he'll be joining us as we go through our show. We're gonna start off with some curated news with Paul, and then we're gonna jump into a little bit of Q&A with Murad. And then open the show to let him share his insights about Bitcoin and its future. So with all of that, I welcome him to our Support and Resistance show. Glad to have you here tonight, Murad. Welcome.
Thanks for having me, guys. Super happy to be here.
Awesome. And feel free to chime in on any of this news that comes up. It says it's all about support and resistance. We either support the news or we resist the news. So, so feel free.
I like that.
All right, I'm gonna drop my screen on so we can take a look at this news while we are talking. But one of the things that, well, the biggest news of today right now is this whole deal with Bitfinex, and I think a lot of us have been well aware that this might have been coming. I think a lot of people have been anticipating something happening with Tether. And if most of the listeners and people that are watching and don't know, these two companies literally are almost identical. It's the same folks running both companies. Bitfinex and Tether are both run by the same ones. So it's not a shock when we see this article that comes up. And actually it was the New York Attorney General's office that came out and said that Bitfinex is actually covering $850 million in losses using Tether funds. So where this goes, I'm not sure, but I'd be interested to get you guys' take on what your thoughts are on Tether as a stable coin, and do you guys think that there's some long-term viability to it, or do you think one day it's just going to implode and that's it? It's going to be gone.
Did this news item come out before the drop? Or
This
did the market start to drop after the news?
I think this caused it.
It came out literally 10 minutes before the drop.
Wow.
Okay, so it was definitely an impetus then.
Yep.
Yeah.
If it happened that quickly. So yeah, first of all, for the people that are out there, Bitfinex and Tether are the same company. That is, a lot of people probably already know that, but for people that don't, like Paul was saying earlier, before we got on the show, if you looked at the hierarchy chart of each company, it looks pretty much identical. So that's a big deal when you kind of read an article like this.
So Brian, do you think Tether's going to be around, or do you think it's going to implode one day?
To be honest with you, I really don't understand the use of stable coins at all. I really don't. I mean, I understand why they're using them, but I don't ever use them because I'm in the mindset of once I'm out of fiat and into crypto, it's not coming back to fiat. So I don't really look at stable coins for anything. So I'm not an expert on this subject. So
the biggest users of Tether are market makers and OTC desks and quant desks that do a lot of arbitrage, and they need to move between various non-fiat exchanges very quickly. And I think the Western people are quite privileged to be able to move from fiat to crypto relatively quickly, but not all countries, especially in Asia, have sort of those kinds of capabilities. And also people who want to avoid KYC or want to avoid AML or want to do some things more offshore, they make a lot of use of Tether. And I think that's the reason why, despite USDC and TUSD and a lot of other more formal and professional stablecoins in the West having arisen in the last couple of years, Tether is still by far the biggest, because its use case is essentially having a non-KYC quasi-fiat currency that you can move around sort of these shady exchanges.
Yeah, no, that makes sense. Because I'm looking at it just for my individual purpose. I never really had a purpose for them, so I never really dove in on the use case for them. But if I was a market maker, I could totally see where I would be using them for sure.
So have anybody here ever bought Tether or used Tether? I know I haven't.
I have not.
I have not, I haven't personally. But this is another example, another kind of fishiness with all of this coming out, because Tether is also the one that was very reluctant on getting official auditing done, right?
Yep.
Over the last couple of years. And of course, there's been a lot of controversy over that, whether their numbers really tie up, right? Whether it's really a one-to-one backing. So every Tether that's being held in reserves is backed by, $1 of fiat, right? So it's unfortunate that something like this is happening. I think it provides more resistance just in general for the general mainstream market to want to enter in cryptos, because when something like this hits the headlines, it just brings a lot more controversy and negativity,
Yeah.
It'll be interesting to see a couple follow-up articles on this and see what happens.
Yep. So again, do you guys, I'm just trying to be direct, do you guys think we're going to continue to have Tether forever and ever, or do you think at some point Tether goes away?
I think it depends how these other stable coins pan out, right? I mean, you have credible ones that are being fully audited, like Gemini and Coinbase, and there's some other ones that are not afraid of releasing their numbers and proving in book that they are abiding by the 1-to-1 ratio. So
yeah, but I mean, like Murad was saying, with looking at it globally, especially in Asia, if they're going to have a tougher time getting in from fiat to crypto, I could see where that use case would be going on for a long time until they have the capability and the infrastructure to go from their home currency to crypto.
Right.
I get that. So looking at it from a global aspect, yeah, I think stable coins could be around for a while until infrastructure is built to basically probably weed them out. Because
Right.
once you have the infrastructure there, then the need might not be there. Any
Yeah.
thoughts on that, Murad?
Yeah, I mean, I definitely agree. I think Tether in general is quite a precarious position because I think Western authorities will try to, I think, take it down one way or another, and they will use like various sort of scapegoating techniques, like say it's used for money laundering or like financing of various sort of nefarious activities or whatever.
Yeah.
In the very long run, I don't think Tether will be a thing because like Bitcoin itself will be stable. So like it's stable coins in general is just essentially a tokenized dollar, right? At best. And so it's just like fiat currency. I think stable coins are merely a medium-term solution.
Gotcha.
Yep, I'm with you.
All right. Well, our second article that came out was about this analyst that did a trade through Nasdaq. It wasn't a real trade, but just to know that there was the ability to trade a Bitcoin on Nasdaq. We know that they're testing it out, and where they're going to go with this, it'll be interesting. And it says here, Nasdaq-based Bitcoin product appears on TD Ameritrade. So it's a little bit of leads into the next article too. But I'd be curious to know what you guys think. If you think that we're going to see actual Bitcoin being traded on like Nasdaq, either through TD Ameritrade or one of your other popular trading platforms. Do you think we're going to see that within the next year or 2 years?
What is the actual product? What's the scope of it? That I don't know. Like it's not an ETF structure. Like what kind of structure is the product?
Right. Well, here's the chart. I'm going to scroll down to it a little bit.
Yeah, I didn't see this article. That's why I asked. Sorry.
Yeah, no worries. There's the chart. This is the one that came from Cryptopolis, and he said, breaking, BTC is now being traded on Nasdaq. I bought one BTC through a TD Ameritrade account. According to the chart, it started trading April 10th, which was my birthday, by the way, everybody. Other digital assets are soon to follow. So
is it set up just like an ATM machine?
No, I think according to this, the way it looks, it seems like it was set up just as you can buy Bitcoin like you would any other stock.
Okay.
But again, the true details of it, I'm not exactly. That's why somebody down there said, so what exactly is CXERX?
Yeah, that's what I was asking. That's what I don't know what it is.
Yeah, neither do I.
What is that?
Right.
I mean, if that's like a company that
Bobby, do you know?
I don't know anything about it.
I do not. This is the first time I'm seeing this this article. Sorry.
Yeah, so it said the staffer going by Sean B explained that CXERX is not a symbol we trade on the live side, and that more likely than not, the asset is being tested on paper trading side, meaning no transaction actually occurred. That begs yet another question: what could CXERX be if and when it goes live?
Yeah, that's exactly what I'm asking.
Yeah. I think that's
I have no idea.
Yeah, I think a lot of people are asking that, but this is what I take away from things like this. It's interesting watching these things develop because we know that people are working on things that they can't necessarily talk about or that they're not ready to talk about. The same thing happened with Backed, right? When Backed, the news came out about that initially, they said, oh, by the way, we've been working on this for 18 months and no one said a word. Right. So we know right now people are working on things. They just can't say, or they're not ready to say what they're working on. But guess what? In the next 15, 18 months, all of a sudden someone's going to come out with some big news. And it's like they were working on it right now. So
that right there is what pumps me up about Bitcoin in the future, because there's so much going on behind closed doors that you could be surprised with some news of any time or any day that could come out and say, hey, look at this product or look at this and this advancement or whatever. That's what pumps me up about it. I mean, there's stuff going on that hits the news, but I guarantee you there's some good stuff being had behind closed doors and teams working on some stuff. I think just a personal opinion, but
yeah, no, I agree. Do you guys have, Bobby and Murad, do you have any thoughts on what the situation is or what it could potentially mean going forward?
You're referring to the Bitfinex situation or the TD Ameritrade announcement?
The TD Ameritrade with the analyst who traded what he said he traded Bitcoin through, but it was just a paper trade. It didn't go through anything. They're just testing.
Yeah, I think it's super bullish because you're essentially like what's going. I think like the next bull market is going to be completely insane because right now, essentially late bear, early bull. A lot of fiat gateways are being built, and the infrastructure is just orders of magnitude much more powerful and much more sophisticated than last time. So right now, for the past 2 years, a lot of people who couldn't sort of do certain moves in 2017, a lot of people realize that another major bull run is coming. So both on the institutional side, a lot of like custody, insurance, like gateways are being built, but also things like this on the consumer side. People will be able to express their view on Bitcoin, buy Bitcoin, whether it be through a derivative or physical Bitcoin. All of these things are incredibly bullish because the next time, quote unquote, animal spirits and bullish energy arrives, there will be like, it's not going to be just like a thin river. It's going to be like a whole waterfall. And I think a lot of money will start moving into this space on all fronts, all around the world, even from like sort of traditional legacy institutions. And I'm very excited.
Yeah, no, I agree.
I mean, because we're just talking about TD Ameritrade right here, but I mean, Fidelity's in this. There's a bunch of other ones that if you get it from the retail side like that, I mean, like you said, waterfall of people,
Right.
especially like a Fidelity. I mean, they're everywhere, and you get people on a nice on ramp from that. I'm bullish on that for sure.
Well, you mentioned that's the whole thing. TD Ameritrade, right? They could bring a potential 11 million investors in crypto, and that's the whole thing. They're working with X, and that's what the next article is talking about. TD Ameritrade following in the footsteps of Fidelity, New York Stock Exchange, and entering crypto. So again, I think as Murad just said, it's about these on-ramps that are being built right now, and as these on-ramps are being built, we're going to watch potentially, and again, what I would say is that we're going to need something to educate those people and trigger those people, because even with the on-ramps being built, if the people don't really understand why they need to move into crypto, they're still not going to go just because you built the on-ramp. So I think more education still needs to be done to motivate these people to say, this is why you want to get in, so that when the on-ramps open, they can run in. That's sort of my thought. Yeah. So the last news curated article I want to bring up is about BlockFi. I think it's really, really interesting to watch what sort of, I don't know if this is indicative of the bear market and the long crypto winter we went through, but you've got $53 million being held by BlockFi in clients' crypto that they are managing. And this is nothing to say of the other platforms like Celsius Network or a couple others out there that do the exact same thing. But we're starting to see more and more people give their crypto to these platforms to earn interest. And we know BlockFi has a 6.2 APR on theirs. It's motivating. So I'd love to hear you guys' insight or your thoughts or inputs on what do you think about people, especially in this not your keys, not your Bitcoin era, of people giving their assets over to these platforms.
I mean, I think you're gonna have to have multiple solutions, in this market. Not everybody is, able to be their own bank, right? A lot of people don't want to be their own bank. That could be a lot of risk for one individual, and so I think you need to have a combination of different solutions to accommodate different preferences. And, I really like seeing BlockFi and companies like this that are trying to replicate kind of traditional, assets that you'd see, like your savings accounts, certificate of deposits, money market instruments, just ways of being able to earn interest on your cryptos that could give more incentives for people to hodl as well, right? And so That takes a little bit more of the speculation out of the market, which is good. And so yeah, I think all of this is, you know, good stuff.
Yep, I agree. As long as I get to hold my private key.
Well, you can't. Right, these platforms right now, you can't hold your private key because they basically have it because they're lending it out.
No, I mean for me to give, I'd have to give my private key to them to be able to get the interest off of anything, right?
Well, the way it works is you put your crypto onto their platform. So you take your crypto, you shift it over to their platform, and they hold it. At that point, it's on that platform.
Okay, so like a proof of stake.
Yeah, sort of like staking.
Like you're staking a coin.
Yeah.
Okay.
That's my understanding. Okay. Well, that's a wrap for the news for me. That's about the few things I want to cover. We can shift on.
All right. Let's open it up to the question and answer session with Murad here. I mean, I'll start out with my question because I'm sure we'll go off on tangents on this, hopefully, or maybe not. I don't know. But I'll throw out the question there, Murad, and we can go from there and get some good discussion going. I had a little color to it, so give me a second here as I read it. I wrote, I have high hopes for Bitcoin to disrupt the monetary systems of the world. One of the reasons I'm in this space, one of the top reasons. So I measure behavior and social mood for a living. I mean, that's what I do. I measure behavior by using mathematical algorithms. That's what I do for a living. So to me, all money is a shared delusion. It's really not real. It only exists because society agrees it has value and we can exchange goods and services. So this allows cooperation with one another. So one of the main things I struggle with when it comes to Bitcoin and all of us that back the technology is our failure to understand the human psychology behind it. So my question to Murad was, do you see this as a barrier to global adoption? And if so, how do we end up coming to an agreement to trust Bitcoin to have value on a global scale?
I think people will realize very, very soon that Bitcoin is more trustworthy than all other forms of money and all other forms of financial institutions that we had thus far. The very reason that it was invented in the first place is so that is to minimize the need for trust in the first place. And so I think Bitcoin's very existence, its purpose is to avoid that very issue that you brought up as much as possible. In fact, I would say that the central banking system, the fiat system, government money system, traditional commercial bank system, Wall Street, all these things require far more faith on behalf of the consumer and behalf of the user than Bitcoin does. And as this technology gets even better and even more secure and even more liquid, I think it will become abundantly clear this new generation of money in almost every way is just far more reliable. The way I think about sort of stores of value and monies in general is through the prism of what I describe as anxiety reduction. And I think over the next couple of decades, people will realize that holding Bitcoin will make them far less anxious than holding their money at a bank, and specifically government money at a bank. In the latter situation, you need to trust the government not to inflate. You need to trust the bank not to freeze your account. You need to trust like a lot of different middlemen. But here, all you need to trust is the open source code. And in an increasingly accelerating and technological world, especially among the younger demographics, we don't really trust people. We trust mathematics and computer science far more than we trust humans. And I think sort of this trend will just become more and more pronounced as we sort of continue forward.
Yeah, no, that's really good because I try to follow psychology all I can in the markets, and that's just that one major hurdle. Because I'm completely on board of Bitcoin in the future of exactly what you're saying. It's just like just in my mindset is it's hard for me to picture it happening because I'm so grown up on Keynesian thinking and Austrian thinking. I think we're almost in a different type of realm when it comes to this type of human psychology of believing in math and formulas, because I have a hard time trusting anyone farther than I can throw them when it comes to the human nature. And I think that's, you have a good point, is you're not following that human nature that you always have to trust in, because it's really hard to break down a mathematical formula if it's already coded. And that to me is, that's a good answer, because I like that thought process of changing the mindset of what you're actually putting trust in.
But I was actually listening to Pump's interview, and I think it was today's interview that he had, and I got a blank on who it was, but it was talking about how we actually do in fact trust algorithms and computers a lot more than we trust humans. I mean, you look at, if your phone gives you a recommendation, the maps tell you where to go, we don't second guess it. We are already being conditioned right now to trust code, I think, to a certain extent, that this is just the next evolutionary process in that. And I think money is the next place where we will in fact trust the code more than we trust people.
Do you guys think that, I'd like to just put this out here just as a general discussion, do you think we're going to see the revolution of digital assets coming to play first in emerging market countries where those, where hyperinflation is happening, or, there's a greater distrust with governments? Because, here in the United States, for the average person, they have no reason not to trust JP Morgan Chase, right? They have no reason not to trust Wells Fargo on a greater extent. And so there's already a lot of trust that's built in a lot of Western economies. So I guess my question is, how do we hit critical mass? What does that look like, and how does that happen? Or can it even happen in Western countries? It might take a kind of a catalyst, a disaster happening, somewhere else for it to move over. Just want to put that out there.
I think personally, it will be very popular in the emerging markets, but among the wealthy there, more so than sort of the average person. I think, so a lot of people, especially early on, kind of position cryptocurrencies as a product to sort of bang the unbanked and sort of help sort of the poorest people around the world. But I think the reality of the situation is that there's very certain niches of people who will be the first pushers of this technology. I think it will be very savvy, very wealthy technologists in America and in the West. And it will also be, but for different reasons, wealthy people in places like China and Russia, because they essentially need to avoid taxation. They need to avoid, it's essentially like a Swiss bank account for them. They want to be able to completely avoid capital controls. And so I think that is those are kind of very specific demographics that are going to be the promoters of this technology, at least for the next couple of cycles. I think for the time being, most people around the world prefer the dollar, or rather something more stable. Really, Bitcoin is a bit of a luxury good to me right now. I kind of like to semi-jokingly say that it's essentially digital jewelry. I mean, we can talk about that a bit further, but very roughly, I think non-government free market money, which is completely unbacked by anything and free floating, it has to emerge as a 1, collectible, 2, store of value, 3, medium of exchange, and then it becomes a full-fledged money as its size and liquidity grows, right? And we're still between a collectible and a store of value, and essentially, even it's not even digital gold yet. It's more like a digital, it's more like fungible digital jewelry. And so we're definitely still closer to a collectible stage in my view. And so also things like operating on the base chain, and the fees are going to be quite expensive. Still, you need to be relatively tech savvy to operate this thing. So really, it's going to be the well-educated and wealthy people who are going to be the early users of this technology in the grand scheme of things. And then later on, as sort of the infrastructure and the layers improve, then it will be sort of more available to everybody else. That's sort of my understanding.
Yeah, I kind of like to use the analogy of, I come from the energy space, and I get a lot of analogies from the energy world. It's sort of along the lines of like when you look at solar power and wind power, the way we view that here in the United States and the way our electricity is basically structured here in the United States is completely different than it is over in other parts of the world. And one of the things that's happening in the energy space in Australia and Estonia and some of those areas out there, they're using this new infrastructure of microgrids, of using cryptocurrency to basically, it's putting your trust in math again, to buy and sell energy with your neighbor automatically. So if you have excess, you can sell it to your neighbor and vice versa. But the way we're structured here in the States is a little different. But as it starts to build up in these different areas of the world, then the people here that, the wealthy and the people that are wanting to push that agenda will change the infrastructure here versus how it's done over there. I kind of look at it that way, because you're going to have Bitcoin and other things happening over in the world for different reasons, but all in all, it's all going to kind of, well, look what they're doing, and everything's working out pretty well, and the infrastructure's working, and blah, blah, blah. And then over here in the States, we're like, okay, we need to jump on this because we're going to lose out. It's almost like an arms race. It's like, okay, if they're doing this and revenue's coming in and people are getting energy for almost free, the way they're setting this up, we need to do something. We need to break down our systems and say, and build it up that way. So I kind of look at it in that kind of realm, to where it's going to happen, but it's going to happen in different ways. So it kind of goes along with what Murad's saying. It's kind of, it's just a different outlook and a different phase on how it's going to come to be. But I think it's going to come to be in one way or another. But the digital jewelry, I haven't heard that one yet. That was pretty good.
Yeah, that's good.
I wear some in my wallet.
No.
All right, should we go to your second question there, Brian?
Yeah. Let's move on here. Another main reason I am in the crypto space is for privacy. I mean, this is a big issue for me. I've been a techno anarchist for I don't know how long, probably since I could read. So I think the world is flipping from where people no longer want their 15 minutes of fame. I mean, I kind of grew up where everybody's like, oh, I need to get my 15 minutes on TV, blah, blah, blah. I think we've completely flipped that. I think we live in a world now that people are going to strive to get at least 15 minutes of privacy. And I think it's going to become a lot harder to, or it's going to become impossible or very, very, very expensive to do so. So I'm a fan of Monero and Loki, which is a fork of Monero. And I invest in both of those by mining. With different protocols, this is kind of the questions. With different protocols coming about in the Bitcoin space with zero knowledge proofs, should I be concerned that this technology can be adapted to overpower the Monero type space, or will there be a different use case for both coins, where they both can live in a world like Coke and Pepsi? Because Coke and Pepsi live well, and they have two different functions, even though they're pretty much the same thing. I think this could come down to the same thing. Monero, Bitcoin, they're pretty much the same thing, but one's got a little bit more sugar in it, and the other one doesn't. That kind of thing. So what do you what's your thoughts on that, Murad, on the privacy side of things?
Yeah, so I actually am not very bullish on privacy coins because essentially, so right now, I think all blockchain, in terms of price, what drives the price, I think all blockchains are competing to become 1 to 3 dominant stores of value. And I do think that for the time being, we'll probably have like 3 or 4 dominant blockchains rather than just one. I foresee like a Pareto distribution where it's going to be like 70, 20, 8, 2, like in terms of relative size, right? And but privacy coins, I'm not so sure about it because like being Bitcoin plus private, it's not enough to compete, in my opinion. It's because if you so, and this is why, if you write out 20 criteria which are very important for a digital monetary store of value, then sure, something like Monero is better than Bitcoin in one of those 20 things, which is privacy and fungibility. But the thing is, Bitcoin is just so far ahead in the other 19 things, like liquidity, infrastructure, financialization, amount of developers, like quality of developers, code base, layer 2, layer 3, everything, right? And it's just, and also more importantly, privacy on Bitcoin and around Bitcoin is gradually improving as well. So in that situation, privacy becomes more like a feature rather than something that you need a completely separate blockchain for, let alone something where a whole separate asset can develop its own monetary premium. Very roughly speaking, I think liquidity and security trump all other features, including privacy, programmability, throughput. The way I view these blockchains is that it's all about 3 things really: strong security, strong governance, and liquidity. And like these are the 3 most important things, and I think these are the 3 things which are going to drive sort of the next 10 years. But things like Monero and Zcash, I used to be bullish about them because I also thought that we needed a separate currency that's a little bit more private than Bitcoin. But there are so many privacy developments going on Bitcoin right now, not to mention like 100 times more liquidity in Bitcoin and like brand value and attention that it has. Is just that Monero or any other privacy coin capturing any of that extra monetary premium is just going to be a very uphill battle. Now, yeah, that's kind of my thinking.
Wouldn't you also say there's a lot of regulatory risk with privacy coins as well?
Yeah, that's definitely yet another issue. Like things like exchange integration of things like Monero is just going to be super difficult. And like I am very confident that like companies like Fidelity are not going to be offering like Monero derivatives or Monero ETFs anytime soon to their customers for a whole variety of reasons, right? So, and also not all, but a lot of them, they by increasing privacy of transactions, they also reduce the auditability of the money supply. There's a trade-off between these 2 issues. And a lot of hardcore Bitcoiners believe that the auditability of the money supply, that is everybody having a confidence that the 21 million coin limit has not been broken, is the most important thing in Bitcoin. And it's by far more important than like incrementally slightly higher privacy of transactions, right? And so what I think is going to happen is that the winning blockchains are going to have transparent, like they're going to be transparent overall, but they're going to be utilizing a lot of little tricks, like Wasabi, Coin Market, like CoinJoin, and a lot of other sort of technologies that are going to make it easier, essentially, to be private.
Yeah, it's interesting. XMR.to, they actually suspended service to U.S. customers. So that's an example of where the regulators are definitely putting the pressure on these companies that are in privacy space to basically shut it down. So they said they're working with their legal team to figure out exactly what they need. But right now, they shut it down.
Yeah, no, that was one of my main issues is like when I start reading things like zero knowledge proofs that are coming out that kind of matches the technology that you find in a Monero or other privacy type coins. If that is a dominant feature, and like you said, a feature, it's not really the main thing, but it's definitely, like an accessory to the jewelry at the moment. So some diamonds that you could put around the jewelry at the moment. That makes sense to me. I just started diving into zero knowledge proofs, and the more I read about it, I'm getting a little nervous on on the amount of holdings I have on the privacy side, because a lot of it is my ideology that's driving me there. So I need to do more homework to try to get the bias out of my head as I read more, just from a personal aspect.
Exactly.
So is there anything else in the Bitcoin space beyond zero knowledge proofs that deal with privacy? That's the only thing I've really seen.
Mimblewimble and
Yeah, Mimble. Yeah, that's right.
bulletproof.
But does that all work together though?
No, I think bulletproof is separate from Mimblewimble.
No, I meant like the zero knowledge proofs. Are they? Those are all working together within Mimblewimble, or am I mistaken?
Yeah, I don't know if Mimblewimble's using zero knowledge proofs or
Okay.
if bulletproofs is doing it. I think bulletproofs is different than ZK zero knowledge proofs. I'm assuming. I'll check it out.
Well, I mean, they probably just I don't know. I'll dig into it too.
Sweet, Bobby, you up next?
All right, yeah. Okay, so my question is pretty to the point, Murad. So can Bitcoin, you see a lot of, especially on Twitter and social media and all sorts of news channels that kind of always have this gloom and doom scenario in order for Bitcoin to succeed. So my question is, can Bitcoin reach its full potential without a major, global or economic disaster, that could happen to the world, whether it's, a huge stock market recession, or it's a global debt crisis, or, some other economic disaster that could happen? Can Bitcoin reach its full potential without something like that happening?
So my opinion is actually kind of contrarian here. I think a global economic disaster, at least anytime in the next 10 years, is actually bad for Bitcoin. So I actually think Bitcoin thrives from like economic prosperity, because at least today, and I think for the foreseeable future, Bitcoin is still seen as this very risky, very new, very speculative asset. And it's probably one of the furthest asset classes on the general risk curve, right? If we had a global economic collapse anytime in the next 5 or 6 years, I think that would actually slow down the Bitcoin revolution, and the price would collapse, because people would essentially dump their Bitcoin, which most people view as a speculative holding, for sort of more liquid fiat currencies and for other sort of more liquid instruments. Now, I think Bitcoin can even succeed without a major economic collapse happening, because you don't really need like the world to go into a deep recession or some kind of an Armageddon for Bitcoin to thrive. I think Bitcoin, like, people can slowly reallocate their monetary holdings and just many of their investment holdings into Bitcoin and cryptocurrencies without actually like a huge collapse happening. And at least for the time being, it's not very desirable. We actually want prosperity. Now, it's interesting because Bitcoin has never faced anything like this. Right. And this is probably going to be the next big challenge for Bitcoin. How does it thrive under economic adversity? Because Bitcoin essentially was invented during the previous recession, and the last 10 years was just nonstop bull market in traditional assets. And we had like 4 cycles of quantitative easing. A lot of people believe that definitely had a positive effect on Bitcoin, because essentially the global capital markets were flush with extra capital, and some of it, of course, found its way to this new kind of weird, quirky, new asset class. So I actually think that if we have a collapse essentially anytime soon, anytime in the next 2-3 years, that would probably slow down the next bull cycle and extend it a little bit. But yeah, there's kind of Safety Namus has a couple of lectures about this, and there's he outlines 6 or 7 different ways how Bitcoin could win, and like two or three out of those 7 don't involve any kind of bad things at all, because it can be a peaceful revolution, it can be a bloodless revolution. People can simply, you need to think of it this way, right? In the end, our long-term plan is for Bitcoin to replace the equivalent of gold and fiat holdings in people's big portfolios today, right? And let's say very roughly, let's say right now, that global allocation is like 99% in fiat and then like 0.5% in crypto, whatever, just for simplicity's sake, right? Now, many people believe that as Bitcoin grows bigger, people will simply compare the two, right, side by side. And they'll realize that Bitcoin is superior in almost every way. And of course, it's not going to happen every cycle. I think that proportionate allocation, that 99 and 1, it will slowly start moving towards like Bitcoin and crypto. So if it's 99 and 1 right now, maybe after the next cycle it's going to be 90 and 10. And after the next one is going to be 75 and 25, etc. And so that transfer, it can happen because it will probably be happening all over the world among different kind of adversarial countries and adversarial banks and adversarial rich people. It can all sort of happen gradually in a way that will be very difficult to stop, but at the same time, probably very difficult for governments or major institutions to sort of crank on it all at the same time. And so essentially, it's possible that this happens not only without an economic recession, but also without violence. Mm-hmm. So that's kind of one of the ways we can proceed.
You know, there's actually a question that was put in the chat from Bill from Bull Flag Group. He was asking, what do you think what would it look like when Bitcoin sort of takes over, meaning sort of the day-to-day life, what it looks like if we were to use it as a reserve currency?
I think it would be like functionally, it would be very similar to today. I mean, most of our payments are already electronic. Everybody's already using Venmo, PayPal, they Chase bank accounts, etc. In terms of user experience, it's going to be just exact same way. You'll probably things will probably be priced in Satoshis. You'll be paid for things in Satoshis, etc. The only reason being is that the only thing being that I think cash and monetary instruments in general is going to play a bigger role in the world and in people's portfolios and in people's wallets. And things like credit and debt will be smaller. Some value, I think, a little bit will flow out of stocks and real estate as well. In general, it will be kind of similar to how the gold standard worked in the late 19th century. But in terms of the way you experience it, it won't be much different from today. You just the money will be more precious. That's it.
Yeah, it's interesting because that was one of the questions. Again, I hate to keep referring to him, but I was listening to this podcast today. But someone asked him what was his most controversial statement. He said that Bitcoin will become a reserve currency, and he said that most people didn't necessarily agree with that, didn't think that would happen. But it would be interesting to see if it does become sort of reserve status. What that really looks like. But that would take a massive amount of effort to do.
So in this scenario, are we then saying that all major fiats are gone and that everybody is using Bitcoin essentially?
That's what the question was. Yeah.
Is that the question? Okay.
Yeah.
So Murad, I have a question. So in order for something like that to happen realistically, wouldn't we need to see governments and central banks, purchasing and owning lots of Bitcoin on their own books in order for that sort of system to actually work?
I think without a shred of doubt, governments will be buying Bitcoin. Almost certain.
When you say probably or already?
Some already are. Some already are, but more like the fringe ones. Yeah. They're not buying it today because of sound money or Austrian economics. They're buying it because they don't have access to traditional sort of payment infrastructure. And essentially, Western governments, with their sanctions, have pushed countries like Iran and Venezuela and North Korea to be sort of dabbling in these things. I mean, there's already evidence that North Korea has over $700 million in Bitcoin under their control. Now, they're probably not holding it for their gold-like and disinflationary properties, but simply because they need to pay hackers and pay their business partners, pay exporters for good reasons and bad. But eventually the world will realize that it's all about disinflation. It's all about the supply curve.
and Bitcoin has like it's the hardest money that we've ever had, people will buy, like most people will buy it simply because price is going up. And the smarter people will buy it a little bit earlier because they see that the inflation curve is very, very low. But for one reason or another, game theoretically, for completely selfish reasons, be it governments or rich people or poor people, everybody will want to have Satoshis because increasingly people will realize that it's like diamonds, like it's the most precious thing, and absolutely everybody in the world will want some.
Keep stacking sats.
All right. Okay, my last question here is a little bit more bearish, and I think it's something important that we need to think about, right? Because it could happen again. This is still kind of in the experimental stage, right? And so, what signals or what sorts of things would you be looking for in the market, Murad, if Bitcoin is not going to be a success, like either from a market standpoint or government standpoint, regulation standpoint? Like, do you see a scenario? What sorts of things would you be looking for to say, okay, this Bitcoin experiment, it's going to die?
It's going to dominate. The only reason is if something better comes along. That's the only major risk that I see in my mind. Only if something.
So you think no matter what, we're going to go towards some sort of a cryptocurrency global reserve system, like the governments?
Yeah, I think it's inescapable. It simply cannot be stopped. Like it's just so much better than both gold and fiat from any point of view that like it will just, it's only a matter of time in my mind.
But when you say a matter of time, are you talking 50 to 100 years? Are you talking 200 years or a decade?
Yeah, so this is a very good point. It's not a matter of like if, it's a matter of when. And so it could take 20 years or it could take like 70 years. But I think it's happening regardless.
Yeah, because there was an article that came out today, actually, and it was talking about Ethereum, not Bitcoin, but Ethereum. And I know people will debate about this, but Ethereum will be hard to stop at this point when 200 plus banks and more than $50 billion companies, including Microsoft Azure, are involved. And so that's what this article was talking about. But granted, it was talking about Ethereum, but if Ethereum is, in their eyes, can't be stopped, Bitcoin definitely can't be stopped.
I don't know. I think that depending on how this plays out with, like on the political scene, if we start to see really controversial things coming out, like terrorist funding, for example, that are using Bitcoin and cryptocurrencies to be able to, sidestep the, economic sanctions being placed upon them for various reasons, I could see this turning into a huge political game where, a major powerhouse like the United States or the UK, or, it just takes somebody large to say Bitcoin is illegal because of X, Y, and Z. They could say, we have proven that terrorist funding has happened with Bitcoins, and right there, automatically, you have a number of regulatory restrictions. Most investment banks, mutual funds, things like that won't be able to, purchase Bitcoins because of that linkage there. So
yeah, that's where I was kind of talking about earlier, like it's an arms race. If our government shut it all down, all of the Bitcoins would just move to a country that allows it, and then that country will flourish, and then the United States will go into the toilet.
So here's the thing, right?
Just
we need
just
to
a
realize
thought.
Bitcoin is not an American technology. Like,
Right.
and
Yeah, that's what I'm trying to get at too. Yeah.
Yeah, it's not in the interest of Americans to shut it down because, okay, you shut it down. Like, for example, like I'm in Azerbaijan right now, or I'm in Russia. Like, you think we would care? Like, we would still continue to buy it. Like, it wouldn't matter. And same with Asia. In fact, I kind of have this kind of a mild conspiracy theory is that the reason the American government has thus far been relatively permissive with this technology is because I actually think Americans are very, very smart. they know that even if there's a 1% chance that this technology completely takes over, if that's the case, they're thinking, okay, let it be. Even if the dollar goes away and Bitcoin and cryptocurrencies become like the next big thing, let Americans dominate once again. And you can see this today. Most of the big developers are in America. Big exchanges are in America. Biggest custodians are in America. All the biggest crypto startups are in America. And yes, there's pockets in Asia and Europe as well. But look, Americans dominate this technology, right? And they're not dumb. Like, regulators are not dumb. And they know that they can't hurt this thing, because if they do, it's going to go to like Singapore, Hong Kong, Japan. It's going to go elsewhere. And the way they're thinking is, if this is going to be a thing, we can't let the Chinese or Russians dominate. We have to dominate it regardless. So if it's unavoidable, we might as well lead it and champion it and control it to the extent that we can, rather than letting them be the leaders here.
Yeah, I'm in complete agreement.
Western governments, as much as we like to hate on them, I think they're very intelligent, and they know what they're doing.
Yeah, and the reason I agree with that is because if it's not the case, they would have had it shut down already.
Right.
Exactly.
It's interesting what I read another article tonight. They were saying about China. They, again, and we all know about the news about China. China has supposedly shut down Bitcoin mining cryptocurrencies long ago, and they're still talking about shutting down cryptocurrency and mining. But they came out with, again, another article saying that they really are going to take a hardline stance on shutting down mining. Is it true? I don't know, but it's interesting to watch where this ultimately will pan out with this technology, because it's, yeah, again, I think you're not going to stop it. That's for sure. There's no putting a genie back in the bottle. It's out.
And the most important thing is that the idea is here to stay. Like, you can't kill an idea, you know what they say?
Yeah.
And so no matter what, like, one way or another is going to weasel itself into existence.
And it's crazy that it all came from one white paper and it upended the entire globe. It just blows my mind.
Totally. It's incredible.
Yeah. All right. Well, I had a couple questions. The first one for you, Murad, is from the point you first heard about Bitcoin until today, have your thought process shifted a lot on your views on what Bitcoin is and what it's going to become from the time, like, did you go through that, you heard it and yeah, whatever, and then you went through these whole phases, but has it maintained its stance, so to speak?
I mean, my understanding kind of improved, evolved, and changed over the years. I was an Ethereum holder for quite a while, since 2016, but like 2017 onward, I sort of been delving into this technology much more. And like I am understanding these things now, not only as technological phenomena, but also as monetary and social phenomena. And when you approach them from that point of view, you realize that like Bitcoin is quite far ahead of everything else. And like the kind of, it's such a big black box that sort of every day you keep learning. But in my particular understanding, you definitely, like, also important to know that Bitcoin itself changes kind of from year to year what it is. People at first thought it was for payments. Now it's more sort of for wealth storage, or more so as an investment opportunity, etc. But yeah, like, my views have evolved together with Bitcoin itself, for sure.
So would you consider yourself, and again, I'm assuming you were around, I'm almost certain you were around during the time of SegWit and the big blockers, small blockers. Did you take any sides in that sort of debate, or were you just sort of on the outside of that and didn't really participate too much in those conversations?
I was definitely there. I didn't participate like very aggressively, but I was generally always a small blocker.
Okay. Yeah, that's interesting. Yeah, no, I mean, I'd say, I mean, I've been around. My viewpoint on it since the time I heard about it until now has been always, I tend to like to follow sort of where I see traction and where I see things moving. And that's why I tell a lot of people when I first heard about this thing, I discounted it first. And I'm like, it sounds crazy, right? Satoshi Nakamoto, no one knows who it is. They can't find out who it is, but all of a sudden this stuff is starting to be worth money and people putting money in it and all these exchanges. And then when I saw Andreessen Horowitz put 25 million in Coinbase, I said, okay, timeout, game over. I'm like, this is legit, because they wouldn't put that kind of money into a company. For what reason? It just didn't make any sense. And then you start seeing people from Wall Street leave and start making transition to crypto companies, and I'm like, okay, yeah, this is definitely going somewhere. So that's been my sort of feel on it. How about you guys, Bobby and Brian? Ed, from the time you heard about it till now, has your views changed and shifted a lot?
When it comes to the small and big block, I remember being at a crypto meeting here in Louisville, and we debated it back and forth for a couple hours just for fun. I was on both sides, but I kind of leaned toward the small block. It just made more sense to me on what it was built for originally.
Mm-hmm.
But I saw some pros and cons on both sides. So I had a hard time picking the two, but I was on the small block group. I'd say the room, we probably had about 40 people there, and it was pretty split down the middle. It was just kind of an interesting talk on why you need the space and all that kind of stuff, and for transactions and cash and all that kind of stuff. So it was pretty interesting. But I lean toward the small block. But I'm not real deep into the techno when it comes to that. I know about this much enough to be dangerous.
Right.
But I was in the small block. What about you, Bobby? Did you get into that at all?
Not so much. My entry into this space was very typical. Read the white paper, went down the rabbit hole, but I saw it more as a speculative kind of asset class, just to trade and profit on. So that's kind of where my thinking was more. It was just more on speculation. And over the last couple of years, my mindset is now shifting towards that, store of value argument for Bitcoin in the future. And the reason I like Bitcoin is you can, come up with valuations for it very easily, right? First of all, it has 10 years of history, which is nice. But then as far as like use cases, it could definitely, compete with gold on many fronts. What I'm really excited for is Murad kind of hit on this a little bit already, is the offshore banking, system that is out there. And I could see Bitcoin really, making a legitimate use case in that market. And so when you think of those two markets alone, it's very easy for me to say, okay, if Bitcoin were to take 10%, let's say, of each market, we can calculate a BTC price, pretty easily. Whereas these other blockchains, for me, it's just hard from a valuation standpoint to get my mind across of like what these things are worth, and so I don't know, that's kind of my evolution from entering crypto, where I kind of stand today. So
cool. So another point topic is about, and I don't know if you are aware of it, but when you were mentioning the countries that have been trying to avoid sanctions, Afghanistan and Tunisia have been looking at issuing a Bitcoin bond, a crypto bond, so to speak, but they called it a Bitcoin bond. And as we look at this, and you guys mentioned earlier about the central banks and them, looking at buying Bitcoin, what are your thoughts around these Bitcoin bonds? And in Afghanistan, they're talking like $5.8 billion of issuance. Are they actually going to buy Bitcoin to back those bonds? I don't know if you're knowledgeable of that topic or not. Murad?
So can you sort of restate the question just a little bit?
Sure. Yeah. So Afghanistan and Tunisia are talking about these Bitcoin bonds, and I'm just trying to, get your thoughts on it. I know Marty Bent and Matt Odell was talking about this, and they were saying if it was even a legitimate article or not. And I'm not sure if it's 100% factual, but I've seen it in several publications now of them saying that Afghanistan is going to issue some Bitcoin bond. And so in that article, it talked about it being $5.8 billion. And I'm wondering, will they actually buy actual Bitcoin to back those bonds, or I don't know.
No, I don't think so. In other articles, I saw that They didn't even talk about a Bitcoin bond. They just said that it was like utilizing like blockchain technology, Hyperledger, whatever, like things like that.
Yeah.
Generally, like issuing, like having bonds that you need to repay back in Bitcoin is like very, very bad, because deflationary money, let alone Bitcoin today, like paying it back is extremely difficult. And so I really doubt that it would be something like this. I mean, it could be just one of those things where they want to issue like the exact same fiat style bonds that they're issuing today. Just part of sort of the technological stack is going to be something like a blockchain or a distributed ledger tech, but I doubt it. I'm with yeah, I heard Matt and Marty discuss it as well, and I'm with them on this one.
Good. Yeah, I got one last question before you guys get the technicals. Lyndon had asked a question about what do we think about blockchain? Will it be the technology that ultimately drives mass adoption, or will a technology come along that is better than blockchain that will drive mass adoption? And any of you can answer that question. Yeah.
So essentially, it's not about blockchain. And to me, that word is like super overused. Instead, I think it's about cryptocurrency, and currency being the big word here is in particularly Bitcoin. And the reason I say this is because blockchain is merely like that's just a tool. That's just an instrument, and that's only one piece of a very big equation. What I'm much more excited about is a monetary revolution, monetary change, replacing fiat currencies with new digital ones. I think that's the big revolution. I think that's the big magic, not blockchain. Like blockchain in and of itself is useless. Like you need a specific use case, and the biggest use case by far is money.
Gotcha. It's interesting that you said currency specifically, because, and again, I'm going to mess this up. It was either in today's brief or maybe it was in yesterday's brief. But one of the countries actually came out and they said that they wanted to make it. Oh, yeah, it was Japan's finance minister urges reporters to adopt new legal term crypto assets instead of cryptocurrencies. So in Japan, they're trying to make a very clear statement that it is not a currency, it's an asset. So interesting that you brought up that term, saying specifically cryptocurrency.
Right.
Yeah. All right. Well, that's all my questions. I'm definitely looking forward to the TA.
Yeah. No. Let's open the floor or open the show to Murad and let him show some charts and dig into Bitcoin a little bit.
All right.
So what you got for us, Murad?
Yeah, sorry, just give me a second to load some things up.
No problem. No problem at all. Yeah, one of the do you want to do oh, never mind. I lost my mind there for a second.
No worries at all. No,
I thought you were gonna ask. I thought you were gonna ask if we could do our predictions. Right now.
No.
You know, Brian loves his predictions, and with the market dropping the way that it did today, I don't think he's ready to make any predictions.
Oh yeah, I'm ready.
Oh,
I mean,
wow.
That's what I do for a living. I gotta throw out predictions, right?
All right.
Gotta keep them going.
Well, I think while we're waiting on him to load those up, I think, since we are all in unison, I think we should give a shout out to Short the Banks.
Yeah. Got my shirt on.
There you go.
I got my mug today.
Oh, nice. Short the Banks.
The water tastes even better in it too. Just so you know.
So what's everybody short the banks mean to them? For me, it's once I have fiat enter the crypto system, it never comes back to fiat. So to me, I'm shorting the banks by reducing fiat for my personal life. That's what it means to me. What about you guys?
Mine is shorting Jamie Dimon. No, honestly, mine's, I think, economic freedom. I think digital currencies are going to be really, really revolutionary for those countries that are experiencing hyperinflation and mismanagement of monetary policies. So, I see short the banks as just equaling economic freedom. So,
yeah. And so for me, I mean, shorting the banks to me is the ability, and I've told people this many times when it comes to cryptocurrency, crypto assets, digital assets, whatever you want to call them, is that this is probably an amazing opportunity to build your financial wealth, to have an impact on your financial future by at least participating. And so instead of continuing to make the banks wealthy, you have an opportunity to make yourself wealthy through this process. Because if we believe what we believe, and I know Murad has talked about hyper-Bitcoinization, if any of that happens, it's probably going to be the greatest transfer of wealth we've ever seen. And it gives folks, I would say your average person, your ordinary person, the ability to now participate in the financial system instead of, again, giving that control over to the banks. Look at third world countries or undeveloped countries, let me put it that way, undeveloped countries that have the same infrastructure we do. They can leapfrog us because, as Andreas has said it so many times, with Bitcoin, you're not only putting a bank account in a person's pocket, you're putting a bank in their pocket, which is a game changer. So short the bank to me means that.
Yeah, I mean, I was kidding about mine. What mine really is, and we talked about it a little bit. We've had all these people in college coming out, Keynesian thinkers, all in the United States, like by the droves, and not really diving into the Austrian type of thing. But I even think shorting the banks, to me, is there's a whole different new economic type thinking that I think is going to come out of this. That's not Keynesian. That's not Austrian. It's a whole different realm of streaming money that is mind-boggling to me. So we might not even call them banks in the future. So to me, shorting the banks is a whole different economic type thinking for the future. So we need some big minds getting on that.
It's not just the banks, but also the very idea of monetary policy. Like Bobby said, part of the reason why he's in Bitcoin is because he wants it to be an option in countries with mismanaged monetary policy. Now, I would take it even a step further, and I would say that what Bitcoin will do is it will completely eliminate the idea of monetary policy, because essentially it will be just one mathematical curve. That's it. And central banks will not be able to, central banks will simply stop existing, because essentially Bitcoiners and people in this community, we believe that humans should not affect the money supply at all. Whether expand it or reduce it, it should just be fixed, and that's it. And we should eliminate humans in this equation, period. Because nobody on the planet should have the kind of power to create money from thin air. It's simply unfair, because there's people who work back-breaking jobs and expend so much labor just to make pennies on the dollar, while there are people in these institutions who can literally create money from thin air. It's simply unacceptable. It's the biggest scam in the history of the world. Like, this should never have been a thing. And they essentially, I call it IQ arbitrage. The people who set it up, they're taking advantage of the fact that people are dumb, and they're deliberately making the whole financial system seem more complex than it is, so that it's complexity, it's obscurity by complexity. And so 97% of the world never questions this. But essentially, Bitcoin is going to transcend this whole system and leave it in the dust. Not even because it's simpler, but because it will dominate by becoming bigger, and in its domination, it will solve all of those problems automatically.
Nice.
Yeah, absolutely a great definition of shorting the banks right there. All right, you all set up there, Murad?
Yes. Just give me 10 seconds, and I'm going to.
Well, that was a good shout out for short the banks, I think.
Yeah. Yes. If he doesn't like that, I don't know what he's gonna like.
I'm sure he has it on his big screen.
I expect a big short the banks poster on my back wall.
I want a hat.
Think he's gonna have it off. Okay.
Yeah. So I think I'm pretty much ready to go.
Okay.
Awesome.
All right. Share your screen and go.
Got a bunch of charts for you. Some on-chain analytics, some technicals, but essentially I kind of wanted to delve a bit deeper into why I think the bottom is in, despite sort of this pullback a couple of hours ago. But yeah, it essentially just want to make a case from a wide variety of perspectives why, even though like in general, I think we will oscillate between 4 and 6K for the next 2 or 3 months. But I think that essentially 3,100 was a low. at this point.
I'm with you.
I'm
Yep,
with you
yep,
on that
yep.
too.
Delphi Digital said the same thing. They came out with their UXTO or UXTO, whichever it is, their report. But they said that that 3100 was it was in, or they said that the bottom was going to be in during Q1 of 2019, and there you go.
All right, show us some details. That'd be awesome.
Okay, so I'm just gonna share my screen right now.
No problem.
Okay. So where should I start? Okay. So just before we go, I posted this on TradingView just a couple of days ago. I think 3 or 4 days ago. Yeah. No, actually 6 days ago. And this has aged quite well given today's events. But yeah, essentially, this was probably a trend reversal today. I think we will dip into mid 4,000s eventually, and we'll essentially just be oscillating in this area for for the foreseeable future, while sort of accumulation or rather reaccumulation takes place before sort of the real big break of 6,000 that I think we will see either later this summer or earlier this later this fall. But it's definitely coming in my view. But more importantly, I think if we look at the OBV, it not only broke sort of that equivalent resistance from the 4,200, but it actually broke two resistances in that sort of one fell swoop from early April. So OBV is in the same place where it was in August 2018. In general, to me, that's a relatively bullish signal. The volume mark was just very, very big relative to previous days in that April 2nd breakout as well. I think because of that right now, 4,000, 4,200 is going to be very, very strong support. But just sort of to compare another thing, I think a lot of people have shown this already, but I'll just show it again. If you chart sort of 200-week and 200-day average at the same time, it's only 2 or 3 data points, but based off of the previous cycles, when we see this sort of kind of a squeeze happening between the 200-day and 200-week, and whenever the price finally breaks out of the 200-day, that usually means, if not immediate, but that usually means that sort of the beginning of the next bull cycle is imminent. We saw that in 2011, we saw that in 2015 as well, and obviously after this breakout in early April, we saw the same thing. Now, I think these two lines will continue squeezing, and the 200-day moving average will sort of be this gliding support going forward. But in general, I think this is a very positive sign. And in my view, we are essentially in the very early stages of the next bull cycle, essentially. Just a similar thing. Very few people sort of plot the median, but this is the 200-day median chart, and we see a very similar thing. Whenever that does finally break after a bear cycle, that usually means the early beginnings of the next bull. Once again, we saw that in 2011, we saw that in 2015. Now, whenever it breaks, and I actually think it's going to happen again, doubly more so after tonight's news. But whenever it breaks out, then it revisits the 200-day median, which is now support, and then that's going to be the launch pad. Once again, we saw that in 2011, we saw that in 2015. Like, it broke through, then it went down, and then sort of the big move happened, right? I think something like it. I mean, it's not going to repeat, but it is going to rhyme in my view. We broke through. Right now, the 200-day median is around the 4,100 area, for 4,150, I believe. In general, I think that 4,000 to 4,300 area is very strong support now. And this 200-day median line is also going to be, I think, the launch pad sort of for the next big wave.
I had a chart that I sent you, Murad, that some of the indicators that I follow on the internals, on those 3 times when that was breaking the median, both of like 2 or 3 of my algorithms that I follow were signaling at the same time as those breaks of the median. So there's a couple of indicators that were validating those breaks, and I also got it this time around. So I like it to where, you know, when the market's breaking the median point, you got the internals that are actually kind of validating that move. So that to me, you know, gives a little bit more of a some backbone or some being comfortable to get back in long or adding to her longs. So I like that chart.
Yep, totally. And essentially, a lot of people were also complaining that, not complaining, but commenting on the fact that usually when you have capitulation, there's like, you want to see sort of a lot of red volume, like a lot of red volume markings on from a technical point of view as well. And instead, we definitely had a gentler bottom without a doubt than we had in 2015. But there's 2 things I want to say here. First of all, this is a chart of inverse NVT, which is 1 divided by NVT. And even though there wasn't as much of a spike, at least on any single day, or even any single week in the in terms of exchange volume, you definitely saw something like that in terms of on-chain volume. Now,
what is NVT? Sorry.
Yeah, so NVT is network value to transaction volume. It's not a perfect measure, but at least thus far, you can definitely see sort of cyclical patterns in it. The very rough logic is that the usage of the chain correlates with the price of Bitcoin, because Bitcoin is simultaneously a financial asset, but it's also a payment or a settlement network. The idea is that those 2 are somewhat correlated, and they should eventually converge, especially before the next bull cycle begins, right? And we are seeing it normalize right now, but the reason I brought this up is to sort of highlight that red area, that in my view, both on-chain volume and exchange volume is possible to manipulate, but exchange volume is easier to manipulate. On-chain volume is a little bit more legit in my view, and we definitely saw sort of a spike in on-chain volume during that December 2018 phase, which to me is yet another marker of quote-unquote capitulation, right? Now, this is my partners, David Priel and Willie Wu, have been working on a bunch of new sort of long-term indicators for Bitcoin. And one of them is realized value. You guys may or may not be familiar with it, but I guess the simplest explanation is that it's essentially the break-even level for an average market participant. What it does is it adds up every UTXO in Bitcoin, essentially every coin, but it multiplies it by the price of when that UTXO was last moved. It's essentially, the very simplest way to think about it is the average price, or that an average hodler paid for their coins. And essentially, when the price is below realized value, then an average person is losing money. And when the price is above, they're essentially gaining a little bit of money. And similarly to a couple of previous charts I showed, in the previous cycles, once the realized price metric was broken, that marked the sort of the beginning of the bull. And that happened once again in 2011, 2015. I think once again it's going to happen here. Realized price is at 4,300, 4,330 right now. And I think that once again, similar to a couple of other sort of lines I showed, sorry, it's going to act as support. Similarly, sort of here you see that same NVT, like NVT raw value. It's starting to normalize. Generally, you want it to go to the bottom of the green band in order to confirm the beginning of the bull cycle. And we're sort of seeing some positive bullish developments here as well. Now,
that green zone, like where we're at right now, that to me looks like a very bullish signal for sure.
Yeah, for sure.
For early stages too.
Yes, yeah, and I think entering into the green area is like an early signal, and then going to the middle, or better yet, going to the lows is like a final confirmation.
Yeah. When you have the arrows on here for the different timings, how does those dates match up with the median price chart? Pretty similar?
Very, very similar. Very,
Okay.
very similar. Yeah.
Okay.
And that's why the reason I'm showing all these lines is that essentially there's like a confluence right now between all these things.
Mhm.
And that's like why I think essentially like the bottom is in essentially, I think. And
Yeah.
even though we'll oscillate a lot in the next couple of months, I think you will not see low 30,000s anymore, essentially.
Okay. And one other thing. Any reason that you can see that those breaks on the realized line always happen in January? Is there a reason for that, you think?
I think it's mostly a coincidence, to be honest.
Okay. I was curious.
There are a lot of theories why due to certain like things like halving and mining like liquidity reductions, the generally Bitcoin cycles will probably be confined to plus minus 4 years generally and kind of roughly. But I think sort of there's no seasonality really. There's not enough data yet to draw any meaningful conclusions. I think any of the months are quite coincidental at this point.
Yeah, no, I agree with that. I was just kind of curious because, I mean, it is 3 January, so it's just the first thing you kind of eyeball.
Right.
And I just have a quick question. So, can you go back to the NVT ratio, the green zone where this one here. Yep. So, how does someone kind of read this? In terms of like, are we looking at like almost like an overbought, oversold like situation, how you'd see it like on the RSI? Or
yeah, exactly. So it's supposed to be kind of like an oscillator. The green means healthy, and when it's above the green, that means it's essentially overbought. Now, do note that it's a little bit of a lagging indicator, but nevertheless, it's still very useful, especially for medium and long-term trading, to show you that, like, at least here, like, you knew that there's still some ways to go down, right? And even here, at like when we were at 6,000 before the big break in November, like both NVT and NVT signal, which is a similar though slightly different indicator, they were signaling like very, very overbought.
Okay.
Yeah.
No, it's really interesting. Thank you.
Yep. And essentially, I kind of wanted to show this as well. This is extremely interesting, I found. Essentially, this is a this is a chart of miners' revenue. And for some reason, it has essentially the bottom in miners' revenue chart always bottoms at the previous top, which is kind of like, I haven't seen a very good fundamental explanation yet, but the effect is extremely eerie. And like you saw that here in 2011 bottom, it returned to the previous peak. In the 2015 bottom, it returned to sort of the mid 2013 peak. And just now in December 2018, it returned to the level where it peaked in November 2013, which is once again like very, very, very interesting.
That is interesting.
Yeah, that's super, super interesting.
And are you familiar with Hyperwave by chance?
I am familiar with Hyperwave, yeah, but I don't think it's going to play out in Bitcoin this time.
Right. I could show this to Socrates and say, look, the Hyperwave already happened. if you look at the miners revenue.
I spent a couple of days with Socrates in Las Vegas in early January this year. Very great guy. We actually have a bet going for 0.1 Bitcoin, I believe, just symbolic bet. He bet that we essentially have a bet. The bet is that we will see 10,000 before 1,200, and I'm on the 10,000 side. He's on the 1,200 side. We made that bet when the price was like 3,500, I think, and essentially. I'm pretty sure I'm winning that bet.
That's awesome. He's going to be on our show next week, so we'll revisit that with him.
Oh, that's awesome. Tell him Murad says hi.
All right, will.
I'll tell him that you owe Murad 0.1.
yeah. For sure. But yeah, just this last chart I wanted to show you. This is destruction. Destruction comes from what people call Bitcoin's days destroyed. a lot of people have raised concerns that on-chain volume is possible to manipulate without any special heuristics. Essentially, a big whale or a number of whales can essentially be sending coins back and forth and thus be manipulating some of the on-chain volume metrics. Because of that, people have invented something called Bitcoin's Days Destroyed, where the coins that haven't moved for a while, they are weighted more. And because time is scarce and coins that haven't moved for a while are scarce fundamentally, that metric is much harder to manipulate. Very roughly, essentially what Bitcoin's Days Destroyed do is they multiply the on-chain volume by the number of days that it's spent unmoved. So if you have one Bitcoin and it hasn't moved for 100 days and then you move it, then the Bitcoin's Days Destroyed value is 100 because it's 100 times 1. And so very kind of roughly, you can think of it as hodlers moving their coins for one reason or another. That usually correlates with hodlers, old hodlers or OGs especially, because OGs coins are weighted heavier here. So in generally, you can kind of correlate this with OGs capitulating. And we definitely saw something like that in November, December of this year. But for the past 3 months, destruction has been in that healthy green zone. And essentially, what we are seeing for the past 2 or 3 months is that OGs are refusing to capitulate. They don't want to sell anymore. And to us, at least, it represents the fabled seller exhaustion. We think there aren't any sellers left, at least not in the 3,500 area. And essentially, that's yet another sort of rough signal why we think the bottom is in.
Awesome.
This is kind of
it's an interesting chart.
Reinforcing your belief that we're in accumulation zone. I'm sorry.
Yeah, exactly.
Yeah. Okay.
Yeah. So those are kind of a couple of charts I wanted to show today.
No, it's good stuff. I really like the mining chart. Was really interesting. Definitely going to need some more time to see on how that plays out. And then there's a couple of charts there that I could see. I mean, because everyone's going to be starting to try to figure out how to get really good fundamental analysis and try to get a good feel for what a fair value is. And some of these inputs over time could become a very good, detailed stuff to look at from a fundamental side for sure as time goes on. Let me share my screen real quick. I want to show you that chart that I shared with Murad. Just real quick, I put on here. These are either the median chart or the one where the realized line was. Where I put Murad's call on here is where those arrows were, and my internals actually matched up really well at those points in time. Basically, when we were breaking trend lines, the first one back here in 2012, when it broke this level here. The RSI, I follow the RSI for bearish and bullish zones. I don't really look at it from a really extremely overbought or oversold. Not that you can't use it for that, but I use it to let me know what zone the market is in at different points in time based on the oscillator itself. So at this point in time back in 2012, it was right when the RSI was bumping up into the upper part, which made it into a bullish zone, which of course made it into bullish here. But one thing that was good was that the ADX, which measures the internal trend of the market, was increasing at a time where the bulls were starting to take over. All of that matches really well with what he's showing on his chart for different reasons, but this kind of validates the picture a little bit. And then in 15, when it was on a low there, when he was talking about it switching over, when it broke the trend line here, gave us a little bit of a fake out right here at this point, but that's when the trend line broke, came back with a little bit of a throwback to the line and brought some more buying interest into it. And it was at this point when it broke up into this area so we could move out of the bearish zone into the bullish zone, which is the green zone here. At the same time, the ADX was increasing on internal momentum. So you're seeing that buying interest coming into the market. So this was another time where it started to take a nice little bull run. Now where are we at today? Same kind of thing. Murad's call, I actually like looking at his because it gives you a little bit more earlier call that not that you can go out and just back up the truck and buy everything, but it's a good first signal. And then if you're a little bit more conservative and you follow these signals along with it, it really gives you a little bit of a validation of, okay, let's get long in this thing. Well, we broke the trend line here. This moved up out of the red and into the green zone. I mean, we're in early stages, but one thing that I like is that the ADX is moving up into the 20 to 30 zone, and this is a weekly chart, so this is very long term. So when this ADX moves up above 20, the bulls are starting to take off here and getting a little bit of momentum on a week over week basis. At the same time, we broke this trend line. So that right there, at the same calls that Murad's having, I like my internals matching up with that, just to give some validations for me to say, hey, I like being long here. Which also, if you've been following our show over the last few episodes, the call from December, the low, and then the low again in February, has been working really well on the near term, also on the daily. So when you match the daily and the weekly together, I'm with Murad on this, and that 3100 is looking pretty strong. So I just wanted to show that real quick because I liked how it matched up really well.
Yeah, I like how your momentum of the markets is matching up with a lot of the on-chain momentum as well. So they're kind of feeding
off. A lot of the other times it tried to break. If you look at the ADX indicator, there wasn't any momentum at all. If anything, it was on the bearish side. So there wasn't any bullish signs at all anytime when it was trying. So these three main points really had really big inflection points of the market, and I like it a lot.
Fibo Swanee,
yeah.
Do you think that if you were only allowed to use one indicator in TA for the rest of your life, would it be ADX?
Well, I always preach that not to trade off of one indicator because you need validation from other things. However, if you have to pick one, that's a tough call. My expertise comes from the ADX, but I also need some things to validate it. It's a tough one.
So I believe your favorites are ADX, Fibonacci of various kinds, and also EMAs of various kinds. Correct?
Yeah, I have a proprietary algorithm that encompasses those 3 or 4 things for sure. And I wait for validation of all of them together, and when they all ring true, that's where my broad market signals come from. Now this isn't for a day trader. This isn't getting in and out of the market on a 2-hour deal. This is something that says the broad market has an inflection point. We're on a trend, and we ride the trend until those indicators tell us otherwise. So that's where I've been since December. That right now everything's still backing that up. So as long as it's being backed up, I'm riding the trend. So, but it's all broad market. It's not let's get in and out of the market.
So it's better for more like positional style trading, right?
Absolutely, yes. Yep.
So let me ask you this: if someone had Bitcoin on a hardware wallet like a Trezor, Ledger, or whatever,
or Cool Wallet,
or LPL, and they then decided to move that to an exchange after holding it. Let's just say they've been holding for 5 years, and someone was to move that or sell that. Is there some indicator that picks that up right away and people would know that right off the bat?
Not in a traditional sense. I mean, there like in the stock market, you would have a money flow index that you can follow money flow. But I don't know if we really have an indicator in this market that would measure that. I don't know of one. I don't know if you guys, if Murad would or Bobby or anybody. I use money flow in the stock market in a traditional market, but in this market, I don't know if there's anything that would measure that. At least not yet.
Interesting. I just wonder how the market looks at that. How does it account for, and if it knows how much digital assets like Bitcoin are being held on hardware wallets and no one's ever touched them for like the past 5 years or 8 years or 10 years even.
Yeah, because I mean, all you're doing is moving. I mean, all you're doing is moving a private key from one to the other, and you're really not transacting anything when it's sitting on the exchange. It's if all of a sudden all the money that's moving from the wallets to the exchange all of a sudden starts to come in buying realm, then yeah, that would show up in the indicators because all of a sudden you're getting a lot more buying interest that wasn't there before. Because if you think of it like a futures market or an open interest of a market, what you're doing is you're bringing in new start positions, not exit positions. Like if someone's buying the market, they're not buying it to cover a short. They're buying it to open up a new position that's open to the market. That would show up in indicators in some of the formulas that I follow. But when it comes from moving money from one to the other, gearing up for something like that, I don't have anything that measures that.
Because I know I've seen articles where they talk about whales are now moving so much money, or whales are doing this and whales are doing that. I'm just wondering how they're picking up these whales moving this money around. Yeah.
It's like from that movie Wall Street. They pick up the phone and says, Blue Horseshoe likes Bitcoin. And then everyone out there and their brother knows that the whales are moving money.
That's funny. Something on OTC markets. I mean, there's like, for instance, we talked about it a little bit earlier, but the guy that just won the lottery. If he was to buy $240 million worth of Bitcoin tomorrow, that's going to be done OTC. Can't do it on the exchange. And if he did that, that's going to be completely, outside of the exchange world where you won't see it. And then if that money's moved right to a hardware wallet and then it's held there forever, like, how do you account for all that stuff? It just seems weird.
Yeah, I don't know. But North Korea would sell them some.
That and what's the other place over there that? Go ahead, Bobby.
Go ahead.
No, you good.
Oh, I had a question for Murad actually. In some of your previous charts, have you also kind of looked at Bitcoin dominance and the trend of BTC dominance over time and how that correlates to, as possible as maybe as a lagging indicator of, possible trends developing?
So I think it's kind of a bad metric because most alts are extremely illiquid. So it's not the same, right? Like you can't, even though they say that, okay, it's like a 300 million market cap, you go to OTC desk, you try selling like 6 million coins, that you can't, like it's hard, right? The order books are so thin. Like, I mean, I can just create a new currency right now, create 1 million units, sell you just 1 unit for like $10 and say I have a $10 trillion currency, right? Like, that makes no sense. And so I think a couple of people are working right now on liquidity adjusted dominance indices. And there Bitcoin isn't at 55%, but it's more at like 75%, which would make a lot more sense to me. And essentially almost everything other than Bitcoin and Ethereum is like super illiquid, so it just goes out the window. But it's like liquidity is king, and security is king, as I say. And yeah, I think like real numbers are higher, and I think Bitcoin will like have an even bigger share of the pie, to be honest, like 10 years from now.
I'm glad to hear that somebody's working on something like that, because that would be an awesome metric to go off of. I'm too busy at my 9 to 5 to come up with that.
So on the next parabolic bull run, I mean, if you think of markets being risk on, risk off, right? What is your statement to those people who are holding a lot of like risky altcoins or assets that aren't quite as liquid, but they could pump up drastically a lot more than like Bitcoin in a major parabolic bull run? Like, why should somebody buy Bitcoin and hold Bitcoin versus buying Litecoin or Ethereum or Bitcoin Cash even?
Yeah, so
what would you tell that person, I guess?
I personally will hold a mix of Bitcoin and alts like throughout the cycle, but in general, I think there will be periods where Bitcoin outperforms and there'll be periods where altcoins outperform. I think towards the end of the next bull cycle, when like retail starts getting in, I think they'll be pissed that they missed the Bitcoin run and will try to buy something cheaper to kind of get the time back, right? So
Yeah.
get the opportunity that they lost. That's probably inevitable. Now that being said, like December 2017 type situation where 100 worthless shitcoins were going 100x every couple of weeks is probably a thing of the past.
Yeah.
But
No.
but I still think there will be like a dozen altcoins that do extremely well, just like because there'll still be a lot of retail like with the focus pumping of certain things. Also, they're much smaller and they're much more illiquid. So any kind of buying pressure just raises them up tremendously, right? And so, as they say, returns will be concentrated in fewer assets. And you should also consider the fact that I think, despite this market being retail dominated, and probably that will still be the case for the next 2 or 3 cycles, the percentage of institutional participation will increase in the next cycle relative to the previous one. And as a result, I think I always semi-jokingly say that an average IQ of this market will be increasing cycle to cycle. So probably be less of stupid shit pumping and more sort of quality assets pumping. I'm personally bullish on Bitcoin and Decred, but those are my only 2 holds for the long term. And the rest of the things I just flip and trade.
Okay. Very well said.
Yep. Makes sense.
So what you guys predict for next week?
Who wants
We
to
got to
go
make this
first?
fast, Brian. You go
I don't know
first.
I don't know about next week, but I think May will be a red month.
Ah,
Ooh.
Okay. Okay.
So statistically, I mean, we're only working with like less than a decade here, but typically April is a good month for Bitcoin. Once again, that's been proven true in this past April. But May is a bad month for Bitcoin, and I think that if that cycle is to repeat, then it's going to be a red month.
so sell in May and go away.
Well,
Maybe.
But you also think that we're going to hold that 200-day moving average, or roughly around that region, correct?
I don't think 4,000 can break. I don't.
Ooh, nice.
Okay.
All right.
All right.
I'm gonna show a quick chart because that's what I do. Let's see here. I might be a little bit, rambunctious here, but I do like a couple of things here. This is kind of the exuberant Elliott wave that I'm on at the moment. But what I think we're at here is a fifth wave to the upside off of this. So it's this is going to be very long term. But right now, I think we're on a 1, 2, 3, 4, 5 wave here to where the third wave will end up being around 6,500 or so, and then we'll come back down to wave 4, and then work our way up to a wave 5, which would be matching probably the 61.8% back in history, about 8,500. But given that, I like, like you said, we could get a nice little move back to this new bullish trend line that we're on, which matches nicely with the 61.8% level, which is about 4,500. So if we do get this move, really over the next month, it definitely could happen in the month of May. Like you're saying, it could be a red month. It would work its way down into here, but I feel like there's going to be a lot of buying interest at the intersection of this trend line and the 61.8% level, which is off the wave count that I have, which is right there. Even if you took it from the bottom here, your 61.8% still around 4,200. So you're still above that 4,000 or that 4,200 that really kind of got us started on all of this to the upside. So even if it does come down and test this level, I still think we got another little move to the upside to get this third wave. Then we would get a fourth wave down, a fifth wave up, which would be wave 1 of 5 that is going to give us the overall fifth wave. I know there's different time frames and different degrees of time on here, but I know it's a little confusing. But this would be a 1, and then a 2 would come back way back here off of the retracement off the 1, and then we'd have a nice long third one. But we're talking 18 months out before something like that happens. But right
so
now,
what's going to happen next week?
Next week, I still think we hold the. I don't have the moving averages on here, but the 233 exponential moving average. If you, I can put it on. Do you have that, or do you want me to put it on?
Yeah, that's sitting at about 4,870 right now.
Yeah, that and this near-term Fibonacci, we broke the 61.8% level here. So a full retracement to 49.19 here in the near term, along with that 233 exponential. Both of that I feel like we'll be buying interest this week, and then could bounce us back up. I don't know if we'll beat 5,700 at this point in time. I still think we'll be in that realm. I'll have to look at the indicators, but right now we're getting a sell off, and we needed a sell off. And the ADX itself is right now it's showing what you would classify as a classic correction pattern in the indicator itself. So a correction is basically just the bearish move against an overall bullish trend. But one thing that I like to see, and this is a daily, and now that we're past 8 o'clock and we got the new daily data on here, the negative directional index is increasing, while the green positive directional index on the mathematical indicator is inching or kind of leveling out, maybe, or kind of going the other direction. So to me, the end of a near term correction could be over, which corresponds to the support at the moving average and the bottom of that full retracement at 49.19. I think that's where the buying interest will be this week. If it gets down there, and then kind of pop up from there, not make a new high at this point in time. Because if this does start to get a little bit of momentum to the downside, I think that 100% level of 49.19 could break, and then we'll be testing those middle 4,000 level and that trend line next.
Yeah.
But I still think that 233 holds this week for near term purpose.
That's good.
So that's my call for next week. We'll see what happens. I've gotten 2 in a row, so I'm about to lose one.
There's kind of a minor. There's kind of a minor trend line. Can you draw that real quick on your chart since you have it up?
Is it still up there?
Nope, it's gone.
No.
Yeah, I thought I hit the button. Here, I'll pull it back up.
No worries.
All right.
So in the wave 3 structure into wave 4, you kind of have a trend line
which wave
developing
3?
there.
Are we talking the ones in parentheses, or because like
the black one?
The black one's the minor wave. The intermediate wave's the 3, and then the primary wave is the 1. So which one?
So it'd be the minor.
Okay.
You can kind of see a mini trend there, like after the major wick up.
Where do I start it? I didn't hear what you said.
It'd be starting right around. It's hard to see on your chart. Here, let me just show my chart.
All right. I mean, I can blow the chart.
And then I can go into my prediction.
Okay.
All right. Can you guys see my chart now?
Almost. I gotta wait and see if it'll catch up.
Yeah, I saw that for a second.
Okay, cool. So this is the kind of the weaker trend line support that I'm seeing right now ever since early April. That's kind of developing. We did break through it on today's candle, or I guess it'd be technically yesterday's candle now. But we're finding support on top of this again.
The daily closed above the line is what you're saying.
Right.
Yeah.
And so you're seeing support on this trend. Now, again, I wouldn't trade based on this trend because it's it hasn't been going on that long, so it's not a great confirmation. But I'm liking the structure so far, and seeing that this 233 that you're just talking about, Brian, this EMA 233 is acting as support. Now, for those of you that have been following us, Brian and we've been long in the market and buy dips. So this sort of price action that's happening right now, I see this as a reaction to news and maybe some profit taking at the same time. But it's not enough for me to sell yet. So again, I'll be panicking a bit more if I start seeing the EMA 200 and the 233, prices breaking through this with like high velocity and momentum. That would be a concern of mine. But So far, I'm holding. I don't see a reason to sell. I'm liking this, near-term structure that's happening right now. Stochastic is retracing back to neutrality. RSI is coming back down, and the thing I like, again, kind of hitting on Brian's point as well on his ADX on the RSI. This 50, the 50 on the RSI has been fantastic support, almost from the beginning of this this new kind of bull run that we've had. So RSI is retracing back to 50, and it's starting to flatten out a little bit, and you're starting to see a little bit more buying interest and support again at this area. So
yeah, that's a bullish signal for sure.
Yeah,
or at least a supportive picture.
For sure. So I don't see any reason to panic right now. So I'm going to continue holding. Now, what I'm going to expect next week, though, is I think the 618 at 5,225 is going to act as pretty stiff resistance in combination with some of that negative fundamental news that just came out today. So we're going to have to kind of see how that plays out. But I could kind of see a bear flag scenario happening in this region where Bitcoin's going to try to rise up. It's going to hit quite a bit of resistance right around 5,225 and maybe spend some time in this region. And
all right, so a little bit of consolidation for next week is what you're saying.
Exactly. So I don't see us breaking really below $5,000 or staying below 5,000, but I don't really see us breaking above 5,225 either. So I think we're going to be in this kind of dumb zone for a while.
Okay, cool.
Yeah, no charts here, but like I always say, I still think that right now with this pullback, with this Bitfinex news, I think some of that can have some lingering effects, and I can see us maybe pulling back a little bit more from where we are now. I don't think that we're going to go too far down. Maybe touch that 48 as Brian had mentioned, and then after that, I think that we could potentially see a little bit more upside, or not even upside, more sideways trading through the month of May until we get out. But for next week, I don't think we're going to go up too much. I think it'll be either down to flat. So that's my call. Down to flat.
Cool. All right. I think we're like 2 hours in now, guys.
2 minutes
time to wrap it up.
No, it was great.
That was a great show. Murad, thank you again very much for taking the time, showing us your giving your opinions on news, showing all the great charts that you had as well. Giving a really kind of new perspective to our audience, and I think to ourselves, on how to think about the markets and what to look out for. So thank you again for that.
Yeah, we appreciate it.
Absolutely.
Of course, guys. Thank you so much for the invite. This was very enjoyable.
Great.
Awesome.
All right. So for everybody watching, I hope you enjoyed that. I think we, showed you all the supporting arguments and resistance as well that we're seeing in the markets on both a fundamental and a technical perspective. So thank you again for watching, and we'll see you guys on the next one. Bye.
All right. Peace out.
See you guys.